So lesson 6.3 brings us to the last part of our worksheet, and that's when we're going to take our financial statement information and extend it from our trial balance and our adjustment columns into the financial statement columns. When we look at the flow chart of account, this is kind of our last piece of this flow chart. So we started by journalizing our information from our transactions. We then created that chart of accounts, and then we took the information from the journal, we posted it to the general ledger. We took all the general ledger balances and we made the worksheet out of those. The worksheet information in the last two columns is going to be used to prepare our financial statements. So in this lesson, we're talking about moving that information into both the balance sheet column and the income statement column. But before we break down the last steps to preparing our worksheet and extending that information to create the financial statements, let's do a quick review on what we did to create the worksheet from the start.
So the first thing that we're going to do when we create a worksheet is what's called the heading of the worksheet. The second piece is where we record what's called the trial balance. So after you've recorded your trial balance and you've made sure that debits equal credits, we're going to move on to this adjustments column, which is step number 3 would be to prepare what's called our supplies adjustment. And step number 4 would be to record our prepaid insurance adjustment. Step number 5 will be proving and ruling all adjustments.
So in today's lesson of 6.3, we're going to be focused on the income statement and the balance sheet columns. Step 6 would be to extend into our balance sheet columns, and step 7 would be to extend into our income statement columns. So breaking that down, when we have our worksheet, we're preparing those two statements, the income statement and the balance sheet. And this is always done at the very end of the fiscal period, which is typically the month. If we take a look at this worksheet, it's going to be done on August 31st because this is for the month ended of August 31st. So it may seem a little backwards, but we're going to do the balance sheet first, even though it's the furthest column in the worksheet. And remember when we had that income summary line that we talked about in the trial balance? That's our imaginary breakdown of which accounts get extended into the balance sheet and which accounts get extended into the income statement. So if we draw an imaginary line above income summary, the remaining accounts are our assets, our liabilities, and our owner's equity. Those are the things that go on the balance sheet, and again, these are also the accounts listed on the chart of accounts that go on the balance sheet as well. Then we'll extend the income statement, and those are everything below the imaginary income summary line. So it's our revenue, which is sales, and all of our expense accounts. Again, these are also shown on the chart of accounts underneath the income statement side. So the actual act of extending the information is super simple. It's taking the trial balance and subtracting the adjustment. Like I said, we're going to start with our balance sheet first, or the furthest column, our assets, our liabilities, and our owner's equity. So if we take a look at cash, the trial balance right here is 4964, and there's nothing in the adjustment column. So 4964 minus 0 means that I can just drag that debit across to the debit column. It's the same thing. I'm doing the same for petty cash and accounts receivable because there's nothing in adjustments. So those numbers I can just drag straight across. Supplies and prepaid insurance are the first two accounts that have adjustments. So I'm taking 1,025 and I'm subtracting 715, and I'm putting the answer in the column with the bigger numbers. So in this case, the debit is bigger. So my answer is going to be a debit of 310. The same goes for prepaid insurance. 1,200 minus 100 is 1,100, and the debit column is bigger, so I've got 1,100 in debit. Now, I think a great way to check if I've done this correctly is that number in our balance sheet column should be what was given to us in our adjustments left over or on hand. So if we look back at what we were given, the supplies on hand is 310, and that's what's in our balance sheet. The value of our insurance we had left over was 1,100, and that's also what we have in our balance sheet. So I'm good that way. That's just a little hack. Next, I'm going to go to my liabilities. Notice that they are in the credit column. So I have no adjustment I need to subtract. So I can just take the credit and drop it in the credit column for both my liabilities. My capital account is also in the credit column, but I have no adjustment, so I can just drag that over. And then my drawing account is in the debit column, and I have no adjustment, so I can also bring that number straight over. We're going to use the same process for all of our income statement accounts, or everything below that income summary line, our revenue and our expenses. If I look at sales, always a credit, And if I take that credit and I subtract the adjustment, which there is no adjustment, I just have a credit going to the credit column. My advertising expense is a debit. I have no adjustment, so it's a debit. If I look at insurance, I don't have a trial balance. I just have the adjustment. So I'm going to take the adjustment number and I'm going to drop that into the income summary. So it's in the debit column of adjustments, which means I go into the debit column of my income statement. Miscellaneous expense, I can drop my debit in my debit. Rent expense, same thing. I have another supplies expense where I had no trial balance. I just have the adjustment, so I'm going to take the debit adjustment and drop it into the debit income statement column. And then utilities is a debit to a debit. Finally, the last thing on our worksheet that we would do is determine whether or not our business has a net income for this fiscal period or a net loss. Now, it's important to note that net income occurs when our revenue or our sales number is larger or greater than our expenses. We would lose money or have a net loss if our sales revenue was less and we made less than what we owed in terms of expenses. So let's take a look at what each of those would look like on a worksheet. On the top, this is an example where we have a net income. Right now, I'm focused on this column right here, the furthest on the right. This is my sales column. So if I look at my sales number, I have 3,565. That number is bigger than the total amount of expenses, which is the column to the left of it, 1,466. So if my sales column is bigger, then I have a net income. If I have a net loss, if I take a look at my sales column, we'll see it right here. The sales credit was only $1,800, but my expenses were $2,200. So I have a net loss if my income statement credit column is smaller than my income statement debit column. Now let's take a look at how you would actually record this. So the first step would be to rule and total all of our income statement columns and our balance sheet columns. Then we have to calculate the net income or the net loss. In this case, I'm going to take sales, 3,565, and I'm going to subtract expenses, 1,466. Because I have more sales income, that means I have a net income. So I'm going to write net income, and then when I subtract it, that's going to give me the amount of net income I have. So if I take 3,565 minus my 1,466 in expenses, my net income is $2,099. And a net income will always go in the debit column because that's increasing. So here's how much my net income is. Now, if I have a debit, I have to always have a credit. Here's where it gets a little tricky. I've given a debit to this financial statement. That means I'm going to credit this financial statement. So I'm actually going to credit the balance sheet column. If it was a net loss, I would do the inverse. I would be crediting my income statement because my income is actually going down. I have a net loss. And then I'd be debiting my balance. So you'll either have a debit in income and a credit in balance if it's a net income. If it's a net loss, you'll have a credit income debit balance. Now we have to do one final rule and total to make sure that debits equal credits. So I'm going to look at just the totals and the net income or the net loss right here. So if I add these two numbers together, I am going to get 3,565. I can just drop that down and I've got debits equal credits. I can drop down my balance sheet debit, and then if I add 5,250 plus 2099, I get the same thing. Again, debits equal credits, and I am set.